One area of the market that's been outperforming this year, small caps. The IWM, that's the Russell 2000 ETF, it's outperforming the S&P 500, that's SPY this year. It's important to know what you own. So let's take a look inside these ETFs. The SPY is heavily tech-weighted. More than 14% of the ETF consists of names like Apple, Amazon, Microsoft, and Alphabet. You're also looking at 15% healthcare, 13% financials. Let's look at something else. So the top sector in the Russell 2000, no, not technology, financials, followed by healthcare and industrials. Kevin, you think small caps will outperform this year? Why?
I do, because I think at the end of the day, the tax reforms haven't had their full effect yet, and because the tax code's just been rewritten for these all-domestic companies. Remember, the majority of the sales of the Russell 2000 all domestic. I think they'll have the full impact of tax reform. The one thing that I would say about the Russell 2000, as you pointed out, financials are the deepest held sector. So many REITs in there, and REITs are very interest rate sensitive. So if you get it wrong on the Fed, you're going to get hurt in that 17% weighting. On the other hand, the tax reform really gives enhanced cash flow to the Russell 2000. I believe it'll outperform the S&P this year. I've put myself at 20% weighting in the Russell 2000.
20%?
Yep. Okay.
Now, another interesting thing, Kevin and I, we always talk about how it's not a good idea to have so much weight in individual names that dominate these. S&P 500, top 10 names, 21% of the weighting.
Yeah.
The Russell 2000, the top 10 names, 2.9%.
Right, well, a lot more stocks in the portfolio, obviously. To me, the biggest question is, where's that division between large and small cap? There's no question in these kinds of recovery markets, which we've seen in the last couple of weeks, small caps tend to outperform, and I agree that we've got some macro factors that are probably looking great for small caps. Part of the problem with the big indexes we talk about, the S&P 500, the SPY, they tend to actually get polluted, if you will, with a lot of mid-cap names. So, even you have to really look hard to find sort of purity in your large and small cap exposure. At least with something like IWM, the iShares small cap, you're getting that pure small cap side of the equation.
Yeah, and is there a major reason, Kevin? I know you said you prefer small caps for valuing the United States over foreign growth this year.
Because the market here still has the benefits of deregulation and tax reform in a way that no other geography has. Chinese, always people question the real numbers there. Clearly, it may be less than 6% for the first time in 10 years. Europe looks very weak right now, and maybe a buying opportunity. You got the Brexit thing and all that. The U.S. is just, it's a political circus, I get it, but the policy's been great. And deregulation along with tax reform continues to fuel the domestic market, and to a certain extent, 50% of the S&P earnings.
Now, what do you like here? FCHA, you've mentioned this before. You had another ETF, I thought.
I like OUSM, again, speaking my own book, because I helped design that index, because it gets rid of REITs out of the Russell 2000. But, I build things that I want to buy, and that's why I'm in this ETF market. But you're going to be down at the conference next week, and the theme there is going to be reconstituting the big indexes away from market cap weighting. Yep. Every guy and his dog is going to be talking about that. You don't have to buy the SPY anymore. There's so many products out of Vanguard and Gold.
Yeah, but do they outperform? I mean, the problem I have with all of these other approaches is, historically, do we have enough data to say it's clearly a better bet?
Coming in on 3 years. Coming in on 3 years on some of these. This is going to get interesting. And the same conference is going on, the same idea is going on over in Dubai next week. They're talking about fund flows. The numbers out of BlackRock blew away everybody on just fund flows in the last 2 years into ETFs. For all of the wrongs and the calls on ETFs, most transparent, most efficient tax-wise, and the #1 asset class in terms of growth. I'm banging the bell for ETFs, and that's why I'm involved in the sector.